Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of corporate finance for you. Today we're diving into a filing from Blue Chip Capital Group Incorporated, and let me tell you, this one has some interesting moves happening behind the scenes. So, what's the big story here? It looks like Blue Chip Capital Group Incorporated has been busy issuing a lot of new stock, and it's all tied to some convertible debt. We're going to break down exactly what that means and why it matters for the company and potentially for investors. Before we dive in, if you're enjoying these straight up insights from official company documents, make sure you're subscribed. We also have a Discord community linked in the description below where we chat about these filings and more. Alright, so what we have here is what's called a Form 8K. Think of this as a report that companies have to file with the US Securities and Exchange Commission, or SEC, to announce major events that shareholders should know about. This particular filing is dated the 10th of September 2025, but it covers events that happened before that. The company is Blue Chip Capital Group Incorporated. Now, a lot of reports will talk about different pieces of this document, but we're going to cut straight to the chase and focus on what's really going on with their finances and their stock. The key part of this report is under item 3.02, which is all about unregistered sales of equity securities. In simpler terms, it's about when the company issued new shares of its stock without going through the whole formal registration process with the SEC. This usually happens when they're re-raising money or making deals outside of the public stock market. The report tells us about a convertible note. Imagine a loan that can be turned into stock. The company had one for $300,000 originally, and $250,000 of that was held back until certain things happened. When those conditions were met, the company issued a massive amount of stock, 1 million shares on the 27th of March, and another million on the 28th of April 2025. This is a big deal because issuing a lot of new stock can dilute or spread thin the ownership stake of existing shareholders. But it doesn't stop there. Between April and September of 2025, they issued another 3,620,000 shares of common stock. This was all part of issuing 6 more of these convertible notes, totaling $485,000. These notes have an interest rate of 10% per year and can be converted into stock at $0.5 per S-share. They mature in 9 months. So, the company is essentially raising money through debt that can quickly become a lot more stock. And in case you thought that was all, they also issued 4,260,000 shares of common stock to their own officers, important employees and other people who provide services to the company between March and September 2025. This means a significant chunk of new stock has entered the picture, and it wasn't T-sold on the open market, but rather through private deals or as compensation. Now, let's talk about what this all really means. When a company issues a lot of new shares, especially through convertible notes like this, it is usually a sign that they need cash. The convertible notes are a way to get that cash now, with the promise of potentially giving up more ownership later through the stock conversion. From a Warren Buffett perspective, we look for companies that are using their capital wisely. If Blue Chip Capital Group Incorporated is issuing stock to raise money because they have a fantastic growth opportunity they can fund with it, that might be good. However, if they are issuing stock simply to stay afloat or pay off existing debts, that can be a red flag. The fact that they issued so many shares, both to investors and internally, suggests they trying to manage their finances by diluting existing shareholders. This isn't inherently bad if there is a strong future to back it up, but you have to question the company's ability to generate enough cash flow from its operations to avoid these kinds of complex financing maneuvers. Right now, based on this filing alone, it seems like Blue Chip Capital Group Incorporated is in a phase of significant change, potentially driven by a need for capital. They're reconverting debt into equity, which can be a sign of growth or financial strain. We need to see how those convertible notes play out and whether the company can actually grow in value to justify the dilution. Looking at these numbers, the most critical thing to watch is whether the underlying business can generate sufficient profits to make all this new stock worthwhile for everyone. If the company S value doesn't increase proportionally to the new shares issued, the existing shareholders will see their ownership percentage shrink without a corresponding increase in value. In conclusion, Blue Chip Capital Group Incorporated appears to be navigating a period of significant capital restructuring through the issuance of convertible debt and equity. While this can be a tool for growth, it also carries the risk of dilution for current shareholders. Investors should closely monitor the company S operational performance and its ability to generate profits to support the value of its expanding share base. Alright, that is our breakdown of Blue Chip Capital Group Incorporated S latest filing. What is your take on these numbers and what they signal for the company? S future, do you think this is a smart move for growth or a sign of trouble? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.